there has to be a learning curve. In the beginning, everything is new. And when everything is new, you are exposed to a lot of opportunities, a lot of promises, and a lot of things that sound very good. Things that seem like they can give you high returns very fast. It's natural to fall for some of them. If you can avoid that, great. But if you can't, then at least let it become a learning experience. That's the best possible scenario. So, let's get to today's question. Why do most people start investing the wrong way? And yes, it's true. Most people do start the wrong way. But not because they are stupid, not because they don't know some secret that I'm about to reveal here. I'm definitely not because they didn't buy the right course. This has nothing to do with that. The truth is much simpler and much more uncomfortable. Investing the right way is actually very simple, not easy, but simple. The problem is what happens when you enter the world of investing. When you are just starting out, suddenly everything shows up in front of you. Day trading, individual stocks, funds, leverage products, options, long options, complex option strategies with multiple legs. All of that becomes available to you. And every single one of these things comes with a promise. A promise of profit, a promise of speed, a promise that this is the smart way to do it. At the same time, there are also people telling you something much more boring. Invest every month, save consistently, buy solid companies, use ETFs and follow the index. Even professional investors struggle to beat the market over long periods. And let's be honest, that doesn't excite anyone. That doesn't make your eyes light up, especially if you are unexperienced. And if you are just starting, by definition, you are inexperienced. When you are inexperienced in any field, you are much more vulnerable to easy promises, and investing is no different. Now, I think there are different types of people. There are people who, when something sounds too good to be true, immediately become suspicious. And honestly, those people might be the best potential investors. The problem is that many of these people end up doing nothing. They get scared of the financial market as a whole. They avoid investing entirely. And that's also a mistake. What you really need is balance. Healthy skepticism, but not paralysis. Critical thinking, without fear. Investments don't have feelings. They don't care about your hopes, your dreams, or your anxiety. It's on you. You put the money in. You need to understand what you are doing. And the more you understand, the simpler everything becomes. The more you understand the nature of false promises, the calmer you get. Let's break down a very common illusion: the day trade illusion. What's the premise of day trading? The idea is simple and seductive. You enter the market during the day, read price movements, make quick decisions, and close your trades with profit. Sounds great, sounds intelligent, sounds professional, and honestly, the premise itself is not stupid. Markets do move during the day. Patterns do exist. some information can be interpreted. So you study, you practice, you make some trades, and then reality hits. You start realizing that you are putting the odds against yourself. At some point, if you are honest, you reach this conclusion. Day trading doesn't work. Not for the vast majority of people. And it's not because markets don't move. It's because markets are influenced by an enormous number of variables happening at the same time. Political events, macroeconomics, institutional flows, algorithms, unexpected news, global events. When you see headlines like the market went up because of this or the market fell because of that, that's mostly nonsense. They don't really know. If markets were that easy to explain, investing would be trivial. And then the numbers show up. Studies show that 99% of day traders lose money over time. At that point, continuing makes no sense. And I read that study here in Brazil, entering a game where 99.5% of participants lose is not intelligence, it's gambling with bad odds. That's not putting probability on your side. So you move on. Now the swing trading illusion. Then comes the next step. Okay, day trading doesn't work, but swing trading is different. Now the story sounds more mature. I'll buy low and sell high. I'll give the trade time. I'm not rushing. Beautiful premise. Again, very logical. But then you study more. You realize that markets can stay down for years, that companies can enter long-term crises, that some stocks never recover, even solid companies can move sideways for long periods, trapped in a range that doesn't offer meaningful profit. And emotionally, can you handle buy something at $10, for example, watching it fall to $1? Most people can't. And sometimes it falls not because of temporary fear, but because the business is fundamentally broken. Then come reverse splits, restructurings, years of stagnation. Again, the illusion breaks. So, what's the real reason most people start investing the wrong way? It's very simple. The investment world is full of illusions, full of sirens calling you, promising easy money, intelligence, and control. The best possible outcome is not never falling for them. The best possible outcome is falling for some, learning, and then staying in the market, but in a much more conscious, humble, and realistic way. At that point, everything changes. You stop checking your account every day. You stop obsessing over short-term results. You stop chasing the next big thing. You understand what you are doing. And that brings peace. That brings consistency. That brings long-term results. I made many mistakes when I started. I invested the wrong way more than once. And that's exactly why I'm sharing this. So, now I want to hear from you. Why do you think you started investing the wrong way when you began? Tell me in the comments. Thank you for watching, my friends, and I see you in the next video.